At its peak, Evergrande was the most valuable real estate company on Earth, a $300 billion empire, more than 1,300 projects, 280 cities, over 1 million employees and contractors building the future of Chinese housing. By January 2024, a Hong Kong court ordered its liquidation. Liabilities exceeded $300 billion. Hundreds of thousands of families had paid for apartments that might never be finished. And one man's empire, built on the most aggressive borrowing strategy in modern real estate, had become the largest debt default in Chinese corporate history. This is how it happened. Hui Ka Yan grew up in extreme poverty in rural Henan province. His mother died when he was a child. He slept on straw mats. He studied metallurgy, worked in a steel factory, moved to Shenzhen, and in 1996 founded Evergrande, a real estate group with a simple observation. China was urbanizing at extraordinary speed. Hundreds of millions of people were moving to cities, and they all needed somewhere to live. His model was not luxury, it was volume. Build fast, build big, sell cheap compared to competitors, turn land into apartments faster than anyone else, and most critically, use the cash from pre-sales to buy more land, to start more projects, to generate more pre-sales. This is the mechanism that made Evergrande work, and the same mechanism that would eventually destroy it. Through the 2000s, Hui Ka Yan's formula aligned perfectly with China's economic expansion. Local governments needed land sale revenue, banks needed borrowers, citizens needed homes, and the central government needed GDP growth through construction and urbanization. Evergrande expanded relentlessly. While other developers focused on Tier 1 cities like Beijing and Shanghai, Hui targeted Tier 2 and Tier 3 cities, smaller places, less competition, lower land prices, faster approvals. By 2009, the company listed on the Hong Kong Stock Exchange. Hui Ka Yan became one of the richest people in Asia. By 2017, Evergrande reported revenues exceeding $32 billion in a single year. In 2020, its reported assets surpassed $350 billion. But the numbers concealed a structural reality that was becoming impossible to sustain. Evergrande did not operate like a traditional property developer. It operated like a perpetual borrowing machine. The company sold apartments before they were built, often before construction had even begun. Those pre-sale deposits funded current construction, but current construction costs were also supplemented by an enormous volume of debt: bonds, bank loans, trust products, wealth management schemes sold to its own employees. At any given time, Evergrande was juggling obligations across hundreds of projects in various stages of completion, financed by layers of debt instruments with different maturity dates. This model works only under one condition: growth can never stop. New sales must always exceed maturing obligations. Land values must keep rising. Banks must keep lending, and buyers must keep buying. Between 2016 and 2020, Hui Ka Yan diversified aggressively: electric vehicles, a football club, a bottled water brand, a theme park division, a health services company. Each one required capital. None of them generated enough cash to matter. They were distractions funded by the same debt engine. And then Beijing changed the rules. In August 2020, Chinese regulators introduced what became known as the Three Red Lines policy: 3 financial thresholds that developers had to meet in order to keep borrowing. A liability-to-asset ratio below 70%, a net debt-to-equity ratio below 100%, and a cash-to-short-term debt ratio above 1. Evergrande failed all three. This was not a surprise to regulators. It was the point. The Chinese government had decided that the real estate sector posed systemic risk to the economy. Developers like Evergrande had become too leveraged, too interconnected, too large to let continue unchecked. The three red lines effectively cut off Evergrande's oxygen supply. The company could no longer refinance its maturing debts with new borrowing. It could no longer roll bonds forward. It could no longer paper over shortfalls with fresh credit. By mid-2021, reports surfaced that Evergrande was struggling to pay suppliers. Construction halted on dozens of projects. In September 2021, the company missed interest payments on its offshore dollar bonds. The formal default came in December 2021. The reported liabilities were staggering, over $300 billion in total, more than the GDP of many countries. Approximately 800,000 unfinished apartments had been pre-sold to families who had already begun paying mortgages on homes that did not yet exist. Hui Ka Yan was placed under police surveillance in September 2023. The following month, he was reported to be under a form of residential monitoring related to suspected crimes. In January 2024, the Hong Kong High Court ordered Evergrande's liquidation after the company failed to present a viable restructuring plan. The collapse did not happen because of one bad quarter or one reckless decision. It happened because the entire business model depended on conditions that could not last forever. Perpetual access to credit, perpetual demand growth, perpetual cooperation from regulators, and a perpetual willingness by the system to tolerate escalating leverage. Every year that Evergrande grew, it became more dependent on the thing that would destroy it. Each new project required more debt. Each new debt instrument required more sales. Each wave of sales required more land purchases. And each land purchase required more borrowing. The company did not collapse because the market turned overnight. It collapsed because the gap between what it owed and what it could generate in actual cash flow had been growing for years. The three red lines did not create the fragility. They revealed it. The structure also changed who carried the risk. A bondholder could price a default. A bank could reserve against a bad loan. But a family that paid for an unfinished apartment was not making an abstract investment. It was buying a future home, often with savings accumulated across generations and a mortgage that still had to be paid. Suppliers faced the same imbalance. They had already delivered concrete, steel, labor, and equipment, yet many were compensated with promises tied to Evergrande's ability to keep selling. When that machine stopped, the losses did not remain inside a corporate balance sheet. They moved outward, into households, construction firms, local governments, and the wider property market. The scale of the empire became the scale of the damage. In the aftermath, the broader Chinese property sector entered its deepest downturn in decades. Country Garden, another major developer, also defaulted. Home prices in many cities declined. Local government revenues from land sales fell sharply. Consumer confidence in pre-sale models dropped. Hundreds of thousands of Chinese homebuyers organized mortgage boycotts on unfinished projects. Contractors and suppliers absorbed billions in unpaid invoices. The wealth that millions of families believed they held in property values had partially evaporated. Hui Ka Yan went from a reported net worth exceeding $30 billion to facing criminal investigation. The empire he built over 25 years unwound in less than 3. The lesson of Evergrande is not about greed or hubris, though both existed. It is about the mathematics of leverage in a cyclical industry. When your business model requires perpetual growth to service perpetual borrowing, you have not built an empire. You have built a system that must either expand forever or collapse entirely. There is no third option.